Hello everyone. Let me tell you something simple. You cannot audit everything. And honestly, you shouldn't even try. Because the real value of internal audit is not in how much you audit. It's in what you choose not to audit. That's where risk-based audit planning comes in. So, what does that actually mean? In the simplest way, risk-based audit planning means focusing your audit work on the areas that matters the most. Not the easiest areas, not the most comfortable ones, but the riskiest ones. Now, let's make this practical. Imagine a company. It has procurement, finance, IT systems, stores, HR. Everything looks important. All of these departments. So, where do you start? This is where most people get stuck. They either try to audit everything or they just repeat last year's audit plan. But a risk-based approach asks a different question. Where can things go wrong and hurt the business the most? That's the mindset. So, how do we actually do this? First, you identify your auditable areas. We call this the audit universe. It's basically a full map of the organization: processes, systems, locations, functions. Once you have that, you move to risk assessment. Now, here's the key. You don't assess everything equally. You look at a few critical factors. For example, financial impact. If something goes wrong here, how much money is at risk? Operational impact. Will the business stop? Will customers be affected? Compliance risk. Are there legal or regulatory consequences? And very important, fraud risk. Is there an opportunity for manipulation or abuse? These are the questions you should ask. Sometimes you also include things like change in the process, new systems, new management, because change usually brings risk. Now, after evaluating all these factors, each area gets a score. Not perfect, not scientific, but structured. And this is important. Risk assessment is not about being precise, it's about being reasonable. Now comes the interesting part, priorities. Because even if many areas are high risk, you still need to choose. This is where experience and judgment kick in. You ask questions like, when was the last audit? Has there been any incident or issue? Is management already concerned about this area? And sometimes you challenge assumptions, because the quiet areas are sometimes the riskiest ones. Once you select your priority areas, you build your audit plan around them. Now, here is something very important. Risk-based auditing and risk-based audit planning is not a one-time exercise. It's continuous. Because risks change, markets change, people change, systems change, and your audit plan must adapt. If something major happens in the organization, your plan should change. That's what makes it risk-based. Now, let me share one common mistake. Sorry. Many organizations say they are risk-based, but in reality, they are habit-based. They audit the same areas every year because it's comfortable, because it's known, but comfort is not a risk indicator. Risk-based audit planning requires curiosity. It requires asking questions, and sometimes it requires challenging the obvious. So, if I summarize this very simply, risk-based audit planning means this. You don't try to cover everything. You focus on what matters most. You use structure to assess risk, and you use judgment to make decisions. And in doing so, you make internal audit not just a control function, but a value-adding one. In the next video, we will go one level deeper and talk about how to actually perform a risk assessment step by step. Thank you for watching and follow me for more.